You are looking live at a daily chart of the Nasdaq, which saw a reversal today. I'm a little out of sorts as I was traveling, and when I started my little journey, the market was doing fine. My stocks were up. I was doing great. Then I get to my destination, and everything. It was only like 90-minute drive, and everything went to down the toilet. Anyway, not a big deal. The Nasdaq fell 228 points or 1.4%, closed at 16,049. You can see the volume ticked up a little bit, 2% above the average daily volume. That kind of happens when the market rallies, and then the algo programs get triggered by the Fed head speaking, and it sells off. So we want to look at a 5-minute chart, and we could just see where they started talking. It looked like a coordinated attack from quite a few different Fed members, and I'm sure they're spooked by the parabolic move in commodities, and not just gold and silver, and just it's all of them. Orange juice, cocoa, all of them have gone up. Oil's gone up, every seems like every day, but certainly every month in 2024, and it's getting a little high. And I think they'd like to see the commodities and the stock market cool off. Anyway, somebody asked me about, the Fed, and if I'm bullish or not. I really don't care what the Fed's position is. I have no control over that. But I just really don't think that they should be allowed to speak during the market sessions. It should be after the sessions or on the weekends. And I'm old school. I remember, Paul Volcker as, the chairman, and you never heard from these guys, and you definitely never heard of any Fed member. You didn't know who they were, not a clue. Now these guys are quasi celebrities, and they see themselves as market movers, and obviously they are, and they just talk their darn fool heads off, but they haven't done anything. The rates don't matter. It's just they just trigger the algos, and you see the sell-offs. They haven't moved rates in 9 months. All they've done is talk, 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 talk. That's all they do is talk. They're not going to do anything. And I just don't understand why the market is so sensitive to this talk. It's just the algorithm, the programs, they get a headline and they just sell programs. Come on, you can see on that 5-minute chart, they just sell off all day, and you get a inverted hammer candle like this, and people, are going to say, oh, it's going to go down tomorrow. The market has no memory. It would not surprise me to see the market just have an inside day tomorrow. I don't think they're going to be having a coordinated attack tomorrow and say the same thing and try to trigger the algos again. But this is the second day in a row. We had a nice little rally going, and then the Fed heads blew it up with their anti-market rhetoric. I just don't understand if that's the government spending a lot of money to keep the economy going, and the economy's fine. You're not going to get a rate cut in that type of environment, unless things start to weaken. And I'm going to get to that in a minute. But anyway, I'm going to take a look. Before I left, I had written down some things. I'm just going to go with it because that's what I had written down at the open. And for the first couple hours, Apple was doing well. It closed down today, but like I got to go to the 5-minute chart. You can see they're buying a little bottom fishing here, and then it sold off with the general market weakness. Tesla, the same thing. This is being bought. It actually closed higher, but you can see this looks like a good short to me. But I'm not even thinking about shorting in this market. We're in a good, strong power trend, and one day does not change a trend. Tesla just had really bad deliveries, and the EV market is just saying the demand is not there. I mean, anybody who wants an EV's got one. You're not going to convert people to EVs as much as you push them. And Tesla is a car company, and it's a richly valued car company. But anyway, they're buying that today. Microsoft was up good for a while, and it looks like they got to that one too. That one looks like the index with the inverted hammer below the 21. So, oh, that's right. I got to go back. I got to go back to the index here. I mean, I just wanted to point out it lost the 10. It's 1.3% below the 10. Let me zoom in here. And it's 1% below the 21. And now it's only 0.5% above the 50 here. And I've been talking about this for a while. One of these times it's going to pull back to the 50. Perhaps this is the time. I don't know. I just think the market moves to fool the majority, and tomorrow it'll probably be up 100 points and not come down to the 50. But anyway, we'll see tomorrow. And you know, it's just another day in the market. So we've been on a long, you know, 5 month uptrend. So anyway, a couple other stocks I want to get to. NVIDIA obviously is you know, the big AI stock, and it looks a little bit worse than the index as it closed with the hammer like everything else pretty much. And it was down 3.4% today, $30. You know, the volume's been really light on NVIDIA, you know, since yeah, just the last few weeks. Super light. Same with SMCI. Similar deal here where it was this morning, it looked like it was going to break above this downtrend line here. It actually did break above it. It was up, I don't know, $40 or so. And what's the high today? At 1057, and then reverse lower $57 or more than 5%. And you could see that was a nice $100 range or 10% range back to normal for super micro. We'll see what it does tomorrow, but still, it's still, you know, pinching in here. Not as tight as we'd like it to be, but that's still flagging. You know, one day doesn't make a trend. These NVIDIA and SMCI, they're kind of correcting through time instead of price. You know, they're not, you know, selling off and undercutting the 50, but they're not going anywhere either. It's kind of like dead money, both of those two. Anyway, I'm going to move on because, you know, I'm sure the Fed chairman will get freaked out by the commodity boom. And when I'm leading with the miners and the oil and gas and commodity stocks every day, that's a real bad sign for me as an investor in, you know, high growth, you know, mostly tech stocks and retail. To see these things going up is it's inflationary, and I'm sure it's got the Fed members spooked a little bit. Alcoa still looks good in this base. I had this on our ready list at the beginning of the week, and it's up, you know, more than 6%. So that's a good week for Alcoa. SCCO, this thing's gone parabolic. You know, and like I said, you know, it's the copper mining, and it's just, you know, to me, this is bearish. This is bearish stuff. When I see these commodities ripping like this is a minor. Freeport McMoran. Yeah, and then CCJ, this one actually looks pretty good in its base. Uranium play. And you know, just like I said, it went up so fast up the right side of the base, it's likely to form a little handle, but those stocks are looking good. MPC, oil and gas refining stock, you know, this thing's going parabolic. You know, I don't know, jump on if you want, but this is not for me. Phillips 66. Once again, this thing's gone from what, 107 to 170, you know, in a pretty short during this rally here. So that's definitely a leading stock. And you know, the oil's gone up, like I said, since this year in 2024, it's gone up a lot. And these stocks are reflecting it. This is Diamondback Energy FANG, which looks good as well. And then ConocoPhillips, one that I had on the ready list for this week, and this thing's gone up every day this week. I don't know what the percentage is, 3.5%. That's a nice move out of the base there. So yeah, mining, you know, copper and, you know, all the commodities, gold, silver, they're doing well, and it's going to put pressure on other stocks, other growth stocks especially. So anyway, I'm going to move on. What else was moving for me today? General Electric, these data centers, the infrastructure plays for the data centers, still really strong. That's not going to change. I mean, this is a multi-year, you know, revolution here, this artificial intelligence revolution. They need these data centers. GE spun off GEV, GE Vernova, and yeah, it's IPOs. You just got to let them settle out. So, Eaton is another one that's benefiting from the data center build out. Looks like it made a new high today, then pulled back, just like GE, you know, and a lot of other stocks made a new high there at 326 and pulled back. You just look at the 5-minute chart, same deal. You know, with everything, it was just the you know, the Fed had spoke and the algos kicked in and down you go. So that's the name of the tune for today. Power, Quanta Services, another one of these, you know, data center build outs, looking good to me. Heck, I wouldn't mind if it came back to its 50, back to that 219 area to a buy point, and so I can get another shot at that thing. Sterling, we're seeing a lot of stocks like this forming this, they run up after earnings or after a news event and they form this little shelf type pattern. You got to look on the weekly to see them better. They're about 5 weeks in length and then they start popping higher. I've seen a lot of stocks like this with this type of pattern. So that is a pretty decent setup for coming weeks. I can't wait to get to the earnings season because this market is being driven by just chatter and there's no news. It's like the companies have gone quiet ahead of earnings, and the market's really vulnerable right now to these Fed speakers. CEG is another one that I like. This one was doing really well today, and then it sold off. Obviously, it made the high here, 185. Pulled back to the moving averages, made another high there around 199, I believe. And now it's just kind of going sideways. Yeah, 198.83. Pulled back to the 10 EMA today. Not a big deal. I wouldn't read anything into the. Yeah, I mean, it's got an inverted hammer candle and a bearish engulfing pattern. Watch it have an inside day tomorrow, just like it did yesterday. Inside today's bar, whatever. Yeah, I just wouldn't read too much into it. This Fed speak, it's not. When the Fed speak, that's not. How shall I say that? What drives stock appreciation is earnings and revenue growth, not what a Fed member says or thinks. Datadog has some decent growth numbers here, just consolidating in a base. I like it above the 50. Right now it's below the 50, but it doesn't have far to go to get to that 50, 126.71 today. So yeah, I could get there. This one is having a good day today until the sell-off. Like everything else, I could go to the 5-minute chart on every one of these stocks and they all look the same. Monday, of course, traded below the 50, closed below there, was having a good day until NTNX, another software name. The software name's looking okay. I mean, they've been selling off for a while. This one actually closed up higher today, huh? There it is, made the high at 66, pulled back to the 50, and then found support and bounced this week, but you know, the party poopers at the Fed kind of ruined the day today. There's another one of these ones that I'm talking about, how it makes this high here and then comes back and just forms this like shelf pattern here. And we've seen a lot of stocks like this just break out to new highs. Heck, I'm going to go to one right now, Spotify. Yeah, there's a high here and then it makes this little shelf and then blasts higher. So those software names, you got to watch for these patterns. I'm watching for them. Would like a little better market environment for them, but who knows what the heck. Maybe the Nasdaq will get back over the 21 tomorrow. We'll have to wait and see. All right, some of the retail names that I had jotted down here before I took off was Levi's. Had an earnings report. Man, it was still up 12%, even though it closed at the low. That thing was really ripping today. Yeah, 22.39. Closed at 20.97. It still was up 12.3% on massive volume. So that is something to take note of. If you look at the weekly chart here, you can see this is a stage 1 base here, cup with handle, had a 3 weeks tight and boom, that move higher. So the market liked the earnings from LEVI. LULU, though, there's a lot of chatter that LULU's getting market share taken from these other private companies. I forget the name of them, Viore or whatever. They have the advertisement with the little gymnast doing flips on the beach. I've seen some of their garments in the gym too. So the people are buying these things. And Lululemon is, doesn't have really a moat. I mean, anybody can make yoga pants and, I don't know. This investment looks pretty shaky to me. Way under the 200, slice to 50, slice to 200, and it looks like it's seeking a price discovery at lower prices. So we'll see what it discovers. Nike is a big kahuna of the retail sell-off. A lot of retail names getting hit. The retail was one of the weaker. It was, I think, the weakest sector today before the big sell-off. And you could see Nike's just, since I mentioned the retail sector, yeah, down to the 50. Hopefully it'll find support here. There are some good retail names, and it's hit and miss. It's just hit and miss. I could go to SIG, the jewelry, and the Jared Jewelers. They said something about they raised guidance, and they're selling more rings, and I guess there's a lot of romance in the air, and people are buying rings for each other, I guess. But had a good day today, showing strength. I'm not going to go through all of them, but the retail restaurant stocks have been strong. Deckers and Crocs, and I'm not going to go through the shoes again today, but I do want to get to the ULTA and ELF sell off. ULTA was up 2% today. I mean, it sold off 15% on Wednesday after they gave cautious words of guidance and said that things had slowed more appreciably than expected. But Elf didn't bounce. This is like in the life is unfair category because it sold off, 12% on Wednesday and sold off more today, almost another percent today, while Ulta Beauty was up. What's going on here? Oh, Elf didn't say anything, but this is a sell sign when it slices to 50. And you could see the big pink volume bars, a lot of selling in here recently for Elf. So something going on. The charts usually, precede the news. So I'd be careful there. Even if you got it in at, if you're in at $50, you still don't want to let profits, turn into, you don't want to see them dwindling away. Obviously, if you got in at 50, you're not in a threat to lose anything. But, I had to part ways with the Elf. It just doesn't look good here. I mean, yeah, life isn't fair. Ulta brought the bad news and it's doing better than Elf. So I don't know, something's going on with Elf and it's in the chart, so beware. They're going to report May 23, and we'll just have to hear from the CEO. I know some people are saying, why doesn't the CEO say something? That's not the way they operate at all. This is a very different kind of company. And anyway, we'll hear from them on May 23rd, it looks like. So, okay, let's go to, this is a group that was doing well, the medical research group, and there's that pattern again that I talked about. This little shelf, it comes up on I guess that was earnings and forms a shelf as the moving averages catch up. Then it was popping higher today. It was quite a bit higher. That's why I wrote it down and then pulled back. Darn Fed heads, man. That's a shame. Yeah, it was at $96. So anyway, look out for those shelf type patterns there. They have been working. Dexcom, another medical product stock, it's showing signs as well. That little shelf pattern at the 132, 133 level, just right in here, pull back to the 21 today. I like that one. I'm not going to put any new stocks on my ready list, though, not under these market conditions, but maybe next week, Dexcom. And then MedP is another one of these medical products, medical research companies, again, with that same type of, pattern here, the shelf. After a move higher, it just trades sideways and consolidates gains, allows the moving averages to catch up. So, yeah, these are ones that I'm definitely watching. I got to go to the Bitcoin stocks. Coinbase was up above, man, its moving averages today, now sold off and closed at the lows of the session. Ain't that a shame? Yeah, it was really strong today. They had news and gapped higher, and then just kind of like the Monday morning gap. Gaps higher than sells off. Today, gaps higher and sells off. A consistent pattern that we're seeing here, which is pretty bearish. MicroStrategy still eked out a gain. $9 or 0.58%. This one pulled back to the 21, found support. And anyway, that's it for me. I'm on the road. I wish I had better news. Except for I do have, in honor of the great Steve Jobs, one more thing, and that is I'm just going to go through some of our stocks on our ready list. And I've written this down earlier because they were doing really well. And they just sold off. I mean, and I've got to go to the weekly because 5% weekly gain is fine. And Meta, to me, broke out to a new high today of 530 something. And so it pulled back. To me, that it's kind of foreshadowing where it wants to go. Yeah, the high there was 430. once again, you're seeing this shelf type pattern, then the breakout higher. I got to look at the weekly on this one. Yeah, there it is, that shelf, and then the break to new highs today. To me, the sell-off gives you another chance to get in. As it broke above the moving averages here and sold off. I thought this thing was going to run straight to 550, but obviously it went to 530 and the Fed members spoke. But to me, that's a buy. I'm going to leave that one on my ready list, because if the market behaves and you know the markets have like no memory. Tomorrow is a fresh start, a new day, and one day doesn't carry over to the next. And I believe that in the morning, if things calm down, Meta could be a buy. And in an environment like this, though, I should say that you want to sell into strength and take profits quicker because the market is a little wobbly. So don't just hang on and think your stock's going to keep going up and up and up and then not have pullbacks and sell-offs. Hubs is another one on the ready list this week. Once again, I got to go to the weekly. It's up 5% this week. That's not bad. It had this flat base pattern, now broke above it. The chatter today was, I guess, Google's rumored to buy it. I do not like, I would instantly sell this stock. As soon as I heard that rumor, it was halted. It's like, I don't want any part of any M&A. I mean, it could be that another company comes in and makes a better offer, but if you got gains on it and it gets, bought out, so be it. That's the end of the road for Hubs. If Google buys them. What was the next one? Oh, Spotify. I did mention Spot earlier. Yeah, this one's had a good week. It's been up every day. It blasted out of that, little consolidation pattern. Yeah, 12%. So if you got a hold of that one, congratulations. Those three stocks have been, good performers for us this week. I did write down Delta Airlines. Yeah, it was down today. That was too bad. It was up and now it's down 4% this week. So, still, consolidating in this base, but take the good with the bad. There's some other bad ones here. We have Square this week. This one's down 11%. TOST is another one that hasn't worked out for us. Down 6.66%. That's got to change. But some other ones that I still like that I'm going to leave on the ready list is CEG. This one's still forming that shelf type pattern. It was up more than flat for the week, but it was up pretty good. So anyway, like I said, I wrote these things down before I took off, and everything just went to crazy this afternoon. It's too bad. Seadrill is one that we had on our ready list. It's up 4% this week. Another one of these oil and gas. This is a driller stock. And then of course the other ones are ConocoPhillips up 3.5%, breaking out of that base, and then Hess. I'm going to leave these on our ready list. They still look actionable to me at 2.28%. Not a bad week this week, especially with the the index. Index is down 2% this week. So when the index is down 2%, you can expect your growth stocks to be down 4 to 6%, maybe even more, because they correct 2 to 3 times, sometimes more than the index. So it's too bad that the Fed heads have to have the big ego and kind of spoil the party. I get it. They're a little freaked out by the parabolic move in commodities, and it's something's going on for sure. But yeah, I mean, it ruined it ruined my day. And I'm sure it probably ruined everybody else's. We had gains and they turned into losses. And I really wasn't watching the market. I was paying attention to the road and being a responsible driver. And anyway, tomorrow's a new day. I had my Dow 40,000 hats ready to go. And oh boy, this thing sliced its 50. Well, that thing looks pretty bad. So no 40,000 hats for the Dow. Where did this thing close? 38,596. Yeah, it's got some work to do there. But so yeah, this rally is starting to look a little wobbly. The S&P sliced to 21. It's 1.4% above its 50 here. So a trip to the 50 wouldn't be the end of the world, but we're just gonna have to wait and see. Like I say, the earnings are what drive the market. There's no earnings for a couple weeks now. I don't think it really starts in earnest for about 2 weeks. And then we start getting rolling, and that's when the rubber meets the road, and that's where investments are going to pay off, and your SMCI and your NVIDIAs, and if they come in and blow out earnings like I fully expect them to have strong earnings like we've seen with Dell. Their earnings, were strong, and then Oracle recently reported. It's got that strong earnings line going due north, and Micron, another one where it had reversals, big AI stock, with the and this stock responded nicely this week, up 5%. And earnings will do it. So I'm looking forward to earnings season, listening to the CEOs and not these Fed members who probably have a little bit of an agenda. Anyway, thank you for watching. At mcstockcharts.com, we never give up. Have a good evening. See you tomorrow.